Hello everyone, Larry Leverage for Ichimoku.co and ForexTrading.tv with a daily analysis for the Aussie dollar US dollar FX for the trading day ending Tuesday, January 21st, 2014, and the current session, which is open now, January 22nd, and that's the final candle that we see here on this chart. And if we look at this candle, it's a very large white body candle. The candle that has finished trading was an indecisive doji type candle and suggested that there was a possibility of a change of trend. Problem for the sellers was, however, that there was very solid support just below where the market was trading at 87.69, and for the fourth consecutive trading day the market had tested either to or just below that area and been rejected from there. So even though there was a possibility of a change of trend, there was a solid floor below this candle. Today we've seen a figure come out, a CPI figure that was quite different than expected by the market, and we haven't seen that change of trend. We've seen the buyers come into this market strongly today for this candle that hasn't finished trading, and this highlights very well how important it is to take our clues off what we see in trading activity. So that candle that has finished trading was a doji candle. It was a candle of indecision. It changed the trend from down, prior trend was down, to the upside, making a higher high and a higher low, and one would reasonably think that there was a good chance of a change of trend back to the downside on an indecisive candle. Now, the indecisive candle meant that the buyers were not supporting the trend to the upside very strongly. By the same token, the sellers were not supporting the trend to the downside, and with the rejection from the 87.69, it did suggest there was a possibility of the trend continuing up. But it really does highlight importantly how we do need confirmation of a change of trend. So we were looking for a possible lower high and lower low here. Didn't happen. The buyers came in very strongly after the market tested down below the area around the 88.50 area, and then we've seen the buyers trying to maintain control but finding resistance at the 88.70 area. Now that 88.70 area was a previous level of support tested on multiple occasions in the recent past, so may offer itself now as very strong resistance to this market. So that is a very, very important level moving forward. Even more important for that area, if the market does break out up above the 88.70 level, is the area around 89.30. And it was a previous minor level, and in the recent past has held as some strong resistance. But more importantly, we have the Kijun Sen and the Tenkan Sen trading around that area, and they may offer themselves as strong resistance to this market if it does rally above there. If the market rallies through there, then the 90-cent level certainly may offer itself as even stronger resistance, being a round number. Now, if the market does come off from here, then we're looking to the 87.69 level to be strong support once again. And if that area at 87.69 doesn't hold as support, then there isn't any major support for this market until it trades down to about the 85.76 level. So very important trading activity coming up for this market in the near future. In terms of the Fibonacci extension, here we're examining the relationship of this current first time frame uptrend that the market's in to the previous time the market was trending up, and with that indecisive doji candle, it interacted with the 38.2%. It did suggest that there was a very real possibility of a change of trend with the rejection from that 38.2% level and the indecisiveness, and we were looking for a lower high and lower low. And this once again highlights how important it is not to just look at the interaction with the Fibonacci levels by themselves. Look at what the candles themselves are telling us, and we required confirmation of that. We were looking for a lower high and lower low to confirm that, and we haven't seen that for today's trading. We've seen the buyers come back into the market strongly. Now, just looking at where this market's interacting at the moment, it's interacting with the 50% level. But we do have the buyers quite strong in the market. If we do see this candle end up as a weak candle, then that may suggest a possibility of a change of trend. Confirmation required, of course. And moving to the Fibonacci Retracement, and here earlier with the candle that had closed trading, this doji type candle, we saw a rejection from the 23.6% level. It's a minor level, not as important as the 38.2, 50 and 61.8% levels. We were looking for a lower high and lower low. Didn't happen, so we're now looking to the 38.2% level to perhaps act as some resistance to this market, and that 38.2% level is at 88.81. Now in terms of Ichimoku, obviously still a bearish market in all three timeframes. We have the market trading below the cloud, below the Kijun-sen, the Tenkan-sen, that's the pink and the green lines here, and both of those lines are in the same area around that 89.30 level, strengthening the amount of resistance if the market does trade up to that level. So that gives us a bearish market in the long, medium and short-term timeframes. Interestingly, looking at the Chica span, that's not below the price action any longer, and it is giving us a mixed signal. It's not confirming the negativity that we're seeing in this market at the moment. So that makes current trading quite interesting, and it does suggest that there may be potential for this market to rally to higher levels. But in line with the market trading down below all of these indicators, we could see the market continue to rally, even possibly through the 88.70 level, rally up towards this 89.30 level or even the 90-cent level, and then for the sellers to come back into the market in line with the trend in the longer time frames. So what we need to do here at the moment though is be patient. The market is interacting with important potential resistance because of the support that was shown in the recent past, and let's react to how the market reacts to this area.